Yo guys, welcome back to Stock Talk Insider. Today I want to talk about, Shopify. It's actually, if we look at the worth of the position, it's actually the smallest position I have, but I want to make it one of the biggest positions I have. I want to put it right between LF Beauty and SoFi, and I will explain why that is right in this video, and let's dive straight into it. So Shopify, the quiet powerhouse behind millions of online businesses. We'll look into a little bit of the EPS, the earnings, all of that. And in 2025, the company has done what many said was impossible. It turned a volatile e-commerce business into a profitable AI-powered platform with real scalability. Today, we're diving into how Shopify reached this milestone, what's happening under the hood financially, and why at $151 per share, this stock might still be in the early innings of a multi-year compounding story. So let's break down the facts, the forecast, and yes, the risks behind one of the most fascinating growth stories of the decade, in my personal opinion. So Shopify's 2025 has been a comeback story. After selling off its money trading logistics arm last year, the company focused squarely on what it does best, building tools that make online selling easier and more profitable. And the results, revenue grew 27% year over year, reaching roughly 10.9 billion. So if we go to revenue, it actually increased year over year from June 30 to about 31%. So that's very big. Also, if you look, it's just stagnating up each other, up. And it will keep doing this year over year, and 12 months over 12 months. Of course, quarterly, it's a little bit up and down, but eventually it's always up on the long term. And you have to be okay with that, because year over year, it's going up substantially, and quarterly, it's also just going up, but with a little bit more of an up to down type of going up. So revenue did grow 31% to roughly 10.9 billion, as you see over here. So gross margins hit 52%, a record high. Net income turned positive for the first time in the company's history. New products like Shopify Magic and AI Storefronts are changing how merchants manage their shops. And in the internal AI personalization engine is now predicting shopper behavior to improve conversion rates by up to 18%. Shopify is no longer an unprofitable growth play. It's a tech platform printing real and big cash, and it will keep doing that over the coming 4 to 5 years. And in my opinion, of course, in 10 years they'll also still be doing that, but not at the pace that they're doing now. They will keep improving and growing for the next 4 to 5 years, in my opinion. But eventually they'll reach a maturity type of level when they'll be giving you guys nice growth, but at a lower pace, because eventually the company will be that big and it will be more mature with nicer margins instead of a nicer EPS, of course, instead of the big revenue growth. So Shopify is indeed no longer an unprofitable growth play, and it is a platform printing real cash. So let's talk earnings. The first half of 2025 tells the story perfectly. Q1 EPS had minus 53 cents. So that's over here with EPS. So you see quarterly we had a downside of 53 cents, but eventually up 69 cents. So that was a profit. That's a $1.22 swing in just one quarter from red ink to strong profitability. Analysts now expect Q3 around 27 cents and 33 cents, and we have Q4 where they expect between 35 cents. Now that brings the full year's EPS to about 78 gap, or roughly $1.50 to $1.60 adjusted. And if the holiday season beats expectation, full year EPS could touch around 175 to 180, meaning Shopify's earnings would have doubled in just 1 year. Then, why revenue guidance went down is one to be spoken about. Of course, that was one of the catalysts that brought the stock a little bit to a halt. And that was one of the negative points. And well, why? We'll talk about it. So one thing that confused a lot of investors this year is that Shopify lowered its revenue guidance for 2025, but here's what actually happened. This was a strategic optimization, not a weakness. They sold Shopify Logistics, the deliverer, which removed billions in low-margin fulfillment revenue. They shifted focus to high-margin AI software and subscription product. The strong US dollar hurt international sales on paper, and management decided they'd rather grow 25% at 50% margins than 35% at 35% margins. In other words, revenue slowed a bit, but profits exploded, and you are seeing that in EPS. So yeah. Then going further, this is exactly what a mature tech company does when they move from growth to compounding, but I still believe that the growth still is here and will still be here for the next 45 years, and the literal baseline to be a mature company will be after that, so by 2030. So the AI, well, Shopify's new growth engine, which is a lot to do with AI. Shopify's bet on AI is paying off. Shopify Magic lets merchants instantly generate product descriptions, ads, and emails using generative AI. Shopify Sidekick, their merchant assistant, answers questions and optimizes the store in real time. And their AI forecasting models learned from billions of transactions, giving small businesses predictive insights that used to require enterprise-level analytics. The genius, you may ask? Well, every store using Shopify feeds back into the data engine, making the platform smarter, faster, and more efficient over time. That's a self-reinforcing flywheel, the kind that turned Amazon Web Services into a $1 trillion business. In my opinion, Shopify is actually a $1 trillion business, but of course, over time it will be. And the 5-year financial projection that I made and what I believe will pan out is that where goes this next? Well, I'll talk about it. So the model is out using conservative numbers, and starting from 2025 EPS, which was around 150 adjusted, to take that one, the expected EPS growth stays between 35 to 40%, which is pretty conservative if you see that over the 12 months ending June 30. Well, year over year, the increase was around 80%. So taking around 35 to 40% CAGR is pretty decent. By 2029, that implies an EPS of roughly $7 to $7.50. Today, Shopify trades at about 65 forward earnings. That's rich, but justified for the kinds of growth. So this is Shopify, of course. For this kind of growth, as margins expand and earnings compound, that multiple could normalize to around 50 times base or 70 times in bull. So the base case is that the EPS comes out at $7, PE stands at 55, and that makes 55% upside. And normally, if all things like that in the base case pans out, that should normally logically come out on $385 a share by 29. So having the bull case, so the EPS of $7.5, which is, I think, still conservative, and I think that the $7.50 will be very normal to get, and I think that $7.50 is the EPS that we will have. So, well, there's not a lot of difference in $7 to $7.50, but the $7.50 and bring the PE to 70, probably a little bit more closer to 60. But yeah, we'll take the 70 because it's a bull case. That means that we have a $525 share. And bringing it even a little bit higher to a super bull is that we keep the $7.50 EPS, but we bring it to a $90 PE. That should bring the stock to around $670 and $700 a share, which is around 360% up from here. Even if the market stays skeptical and re-rates Shopify lower, EPS growth alone could easily double the stock within 5 years. The psychology of valuation. the psychology of valuation, I mean. So remember, markets don't move linearly. Growth stocks often trade sideways until profitability and AI-driven momentum click with Wall Street's narrative. The moment Shopify delivers 2 or 3 consecutive quarters of 30% EPS growth, analysts will start re-rating the multiple upward. That's when the compounding truly accelerates valuation expansion on top of earnings growth. So we do have some key risks, and that is competition in digital commerce is fierce, but I think that Shopify is one of the best competitors in that branch. Consumer spending could soften, and Shopify's high valuation leaves little room for big misses. So that's some of the key risks. But the company's pivot to profitability means it can weather slowdowns much better than it could in the past. So the long-term vision is clear for me. Over 500 million new small businesses are expected to launch globally this decade. Most of them will sell online. Shopify's strategy is simply be the AI operating system for those merchants. From payments and marketing to fulfillment and data. If they execute, this could be the backbone of global entrepreneurship, and investors at today's prices are essentially buying that infrastructure early. Shopify has moved from a growth story to a profit story and soon to a compounding machine. So, having talked about all of this, 2025 marked the year Shopify proved it could make money, not just chase growth. With AI integration, global expansion, and soaring margins, this company is still in the early innings of its next chapter. So, what do you think? Is Shopify the next Titan or not? Let it know in the comments. And I am very bullish on this company, and I'm very intrigued in what you guys may think about the company. Of course, it did have already a nice run, but we're not looking on a couple of months, we're looking on years ahead. So, having talked about that, I do want to mention that I will be buying more of Shopify, and I will start to DCA more into the position. As you see, we now hold around 13 shares, which is literally nothing, but I already made around 400 euros, which is a nice profit on only that much invested capital. So, do I think it will go higher? Yes, it will go higher, and I think that $500 is the minimum for this stock in a couple of years. And also, one last thing to mention is that they have 1.3 billion outstanding shares. So, well, that's something that they can also buy back when they mature, and that's probably what they will be doing when they have a lot of cash. I do believe that 1.3 billion shares is something that will be bought back. Of course, not all of it, but a lot of that will be bought back in the coming years. And yeah, I'm very, very interested in what they will be doing. And yeah, I think that your share will get only more worth over time. So yeah, I believe a lot in this company. And I want to thank you guys for watching this video, and yeah, see you later, guys.